3 months ago, we did something quite reckless. We gave 27 different AI models full control over a $10,000 capital and let them trade autonomously. No intervention, no second guessing, no stepping in when things got uncomfortable, just pure decision making by machines. So each model started with the exact same capital, $10,000, and one mission. They had to trade a basket of gold, S&P 500, Nvidia, Bitcoin, and the euro-dollar pair on Forex. And they had to trade as profitably as possible while minimizing drawdowns. They can go long, they can go short, they can manage risks the way they want, and close trades whenever they feel like they have to. Our only rule was simple. Once the system is live, we are not allowed to interfere. And after 3 months, one model clearly dominated the entire competition. It returned 72% from $10,000 to $17,000 in barely 90 days. Now, here's the part that has caught me off guard. This winning model does not look at charts. It completely ignores candlesticks. It ignores support and resistance. It does not use moving averages, RSI or MACD or any of the other technical indicators that most traders spend hours studying every single week. It does not analyze price action patterns either. It does not care about trend lines. It only reads news. Yes, headlines, economic releases, corporate announcements, and so on. Basically, the fire hose of financial information flowing out every day. And that's it. It makes its trading decisions based on that. And in the current market environment, at least for the last quarter, that approach has outperformed the 26 other AI models, including the ones specifically built around technical analysis and price action data. And the thing is, it wasn't one lucky trade or one single oversized bet that carried the entire performance. This model actually executed hundreds of trades, as you can see, 564 to be accurate. It went through drawdowns, it experienced volatility on the several markets that it trades, but somehow by interpreting information instead of staring at charts, it kept compounding and accumulating profits. So what is going on here? Is technical analysis losing its edge? Or are markets becoming more narrative driven? Or is this just some kind of temporary anomaly? To answer that, you need to understand how the experiment is structured. The AI trading arena isn't one AI trading one cherry-picked asset. It's a competition. Originally, it was 27 different AI models competing at the same time. And each core model exists in 3 separate versions. There is the version price only, where the model only has access to raw price data. There is version 2, which is technical analysis based, where this version had access to indicators, oscillators, moving averages, Bollinger Bands, momentum metrics, and so on. And there is version 3, which is news only. No indicators, no technical structure, only financial news and economic releases. Well, as well as central bank statements and everything that comes out in the headlines. And each version operated independently. Each model started with $10,000 of capital, and the assets were intentionally diversified. Gold, S&P 500, Nvidia, the Nvidia stock, Bitcoin, the euro-dollar, and that mix created exposure to commodities, equities, a high volatility tech stock, as well as crypto and macro-sensitive Forex. So different behaviors, different drivers, and different volatility profiles as well. Once deployed, the AI models had full autonomy over their capital. They decide when to enter, when to exit, how long to hold, how much they want to bet on each trade. And basically there is zero manual override. So if a model hit a drawdown, I don't step in. On the opposite, if a model goes on a hot streak, I don't scale it. There is literally zero emotional interference. And each model actually tells us what its reasoning is in real time as it makes its trading decisions. Now, because we had all 3 versions of each model being ran simultaneously, this created a very interesting controlled comparison between the 3 trading philosophies: the pattern recognition from price only, the indicator confirmation with the technical analysis based models, and the information interpretation from the news only models. And after 3 months so far, the scoreboard is quite clear. As you can see on the top of my screen, out of the 7 best performing models, 6 of them are news-based. Only Gemini 3 Pro is quite of an outlier because this is a raw price data only model. So by the way, kudos to Gemini 3 Pro because it's purely trading with price data only, and it has been doing tremendously well so far. If we look at its stats, they are very good. 62% profits with only a minus 11% drawdown, and so far 256 trades closed. And what's interesting is that the leading models tend to not have that high of a win rate. For Gemini 3 Pro, it's 44%, so basically it loses more trades than it wins. Now, if we look at the leader, which is Qwen 3 Max News so far, this one has an even lower win rate with 42%. Now, most people might think that such a win rate is actually pretty bad. And this is mostly true for beginners who might think that you need to win most of your trades to succeed. But that's not true at all. This model didn't rely on being right all the time. It relied on asymmetric outcomes. So losses were controlled, but winners were allowed to expand when the narrative had strength. So if you look at its losers, they tend to be much smaller than the winners. The winners, actually, he rides several percentage points. So as you can see, +3, +2, +6, +1, +4 almost, +3. Whereas the losses are, on average, of course, much smaller. -0.8, -0.08. Here we have quite 3 bigger ones, but then they get smaller again, -0.06, -1.3, -0.46, and so on. And the interesting thing as well is that it's a very active model. As I said, 564 trades in 3 months. That's a good thing because it trades quite a lot. So the more it will trade, the more reliable the statistical sample of trades, the more reliable the statistical sample size will get. And as I said, what's truly fascinating is that the news-based models tend to clearly outperform so far. Like, look, we have this second news-based model, which is Kimi K2T, which has also done very well, and it's a news-based model. We have Mistral Medium News, which has also done well so far with plus 23%, though it's currently on a drawdown. We have Gemini 3 Pro News, which has done well also with plus 21%, and DeepSeek with plus 13%, and so on. Meanwhile, most of the raw price-based model clearly tend to underperform and have not reached these kinds of results. As you can see, most of them are at the bottom of the scoreboard. I told you at the beginning that we initially ran this experiment with 27 models, but in the scoreboard you can only now see 17. That's because the TA-based models were all doing very poorly. And for us, they failed at the experiment, so we removed them. Basically, it seemed that sending technical indicators to AI models and let them make decisions based on that had absolutely no edge and was more destructive than news or just raw price. So why would a model that completely ignores charts clearly outperform a model that is entirely built around it? One explanation is that markets right now are more narrative-driven than pattern-driven. Like, think about the last few months. We had inflation prints, central bank commentary, AI earnings hype, regulatory headlines in crypto, rate cut speculation, geopolitical tension, and basically we had information shocks every single week. And basically over the past few months, price was driven by catalysts. A surprising Fed commentary can invalidate weeks of technical analysis buildup in seconds. An economic calendar release can reprice entire asset classes before indicators even flip. And these news-based AI models live inside that information stream. They don't just read one headline, they process thousands every single day. And I don't know what exactly is going on inside an AI model, but I tend to think that it can track tone changes. It compares language shift from one release to the next. It can detect sentiment acceleration before moving average crossover even appear. And it can do that without ever getting tired. Now, we will eventually put TA-based models back into the AI trading arena, but we need to think about the lessons that we've learned so far, because as I said, for the past 3 months, most, if not all, of the TA-based models failed. I mean, they didn't burn out the accounts, but at no point were they in profits. So by the way, if you have any suggestion as to what we should make them process or the way we should make them behave relative to technical analysis, of course, feel free to give us recommendations in the comment section. Now, if you want to see if the scoreboard will actually shift or if sudden regime changes in the markets will positively or negatively affect these current AI models that are trading, make sure you follow the AI trading arena. I'll put the link in the description below. What you can be sure of is that we will continue displaying these trades and these AI models in a very transparent way. We are actually getting the results as early as you do because this experiment and the results are unfolding in real time. And if you want to follow the next phase of this experiment, the AI trading arena, well, then make sure you're subscribed to the channel. All right, thanks for listening to my monologue, and I'll see you soon. Ciao.